6 months into FIRE, my withdrawal rate is just 2.9%, and even after funding my living expenses, my JP portfolio still grew 12%. Let me share with you how this happened and what I've learned in my first half year of early retirement. Before I dive into the numbers, here's a quick recap. I retired at 47 with about 3 million in financial net worth, including 1 million in CPF. My retirement is fully funded by my JP portfolio, a mix of stocks, funds, CPF, SRS, cash, and insurance. Some people ask, why start a YouTube channel and Instagram account if you are already retired? Why not just spend all that time with family? The truth is, retirement freed up about 45 extra hours every week, and that's nearly 180 hours a month that I used to spend at work. I do spend more time with my family now, but I also find it meaningful to spend just a few of those hours each week sharing my journey online. It doesn't take away from family or life. In fact, it adds purpose. In fact, what I'm doing here is similar to many in the FIRE community who share their journey on Instagram. I'm just extending my story onto the YouTube platform. This channel is my first step in Ikigai living, to share knowledge about FIRE in the Singapore context, to stay accountable in my own journey, and to build a community with others pursuing purposeful financial independence. And just to be clear, if this channel ever monetizes in the future, there will be a bonus, but it's not the objective. My FIRE is fully funded by my JP portfolio, not YouTube. Some of you may remember my video on the liquid asset strategy. That's where I explained my approach to a 3% safe withdrawal rate and my total return strategy. However, I would like to highlight that my JP portfolio is quite different from the textbook SWR portfolio you often read about. Firstly, I don't just own ETFs. Instead, I hold a basket of financial assets, which I will share more in the next section. Also, I'm not 100% invested. I also keep a cash bucket for liquidity and peace of mind, so I never have to sell growth assets in the downturn. That's the foundation of what you're going to see in today's decumulation update. And an important note, for consistency, I'm using a base JP portfolio value of 2.9 million as at March this year, which was the start of my early retirement. This is different from the 3 million breakdown I shared in June, which already reflected portfolio growth. All my decumulation updates will track off this March baseline. For my JP portfolio, my target is simple. Aim to achieve at least 5% nominal returns annually and to keep withdrawals under 3%. This balance should allow me to maintain my lifestyle inflation adjusted while sustaining my JP portfolio in perpetuity. In periods of higher inflation, I'm also prepared to adjust my expenses flexibly and even lower my safe withdrawal rate to 2.5%. In other words, I'm prepared to withdraw 72,000 to 87,000 per year, or between 6,000 to 7,250 per month, depending on inflation situation. In any case, this income is almost 2 times that of CPF Life ERS payout of 3,001 to 3,300 per month for today's cohort. From April to September this year, my actual expenses amounted to less than 46,000, with the detailed breakdown as shown on screen. I also paid income taxes during this period, but this is not included in the table. To put this in perspective, I annualized my 9-month expenses, which works out to a safe withdrawal rate of 2.9%. That's comfortably below my 3% ceiling, so I'm exactly where I want to be at this stage of my FIRE journey. These expenses were funded through a blend of dividends, my cash bucket, and selective profit-taking from oversized stock positions. Importantly, I didn't have to touch my core long-term holdings, which continue to compound for the future. True wealth extends far beyond your bank account. FIRE isn't just about managing expenses, it's about what those expenses enable. Starting this new phase, with true time freedom, I've been able to direct more energy into other wealth goals beyond money. On social wealth, I've gone for 3 family trips, including my parents, with a year-end holiday ahead, plus more time for catch-up with friends, including a 4-hour lunch with another friend who has also fired. This is something I could rarely do during my corporate years. On physical wealth, I now have time for daily exercise, plus weekly spin and Pilates classes with my spouse. These routines are not just about fitness, but also shared experiences and staying healthy together. On lifestyle and well-being, I continue my regular facials, massages, and manicure sessions to age well and care for myself. On mental wealth, I continue to invest in myself through educational subscriptions and courses to stay sharp on investing knowledge. I've also started my Ikigai Living YouTube and Instagram accounts to learn content creation as a new creative skill. And before the year ends, I'll be using my Skills Futures credits to pick up another new skill. So, while the numbers show that I'm spending within sustainable limits, the real story is this. My expenses are intentional investments into social, physical, lifestyle, and mental wealth, all part of living a purposeful FIRE journey. Let us now move on to take a closer look at how the JP portfolio has performed over the past 6 months. With regards to my CPF funds, the overall value grew 5.9%, and this is after mortgage servicing, as well as not factoring in CPF interest, which is only accrued once a year on 31st December. You can watch my other CPF video on how I grew my CPF to 1 million at age 47. On portfolio actions, I used my CPF IS account to increase my investment in Singapore stocks and index funds during this period. Also, I top up my MA back to the ceiling of $75,500 after my insurance premiums and some medical bills were deducted. This provides me with some amount of tax relief as I still have to pay income tax for working 3 months this year. Moving on to my SRS funds, the overall value grew almost 18%, with all the funds fully deployed, and I'm adopting a passive strategy here. You can check out my other SRS video for further details on my SRS investments. On portfolio actions, I trimmed some oversized stocks and redeployed the proceeds into diversified funds. The last component of my non-liquid assets will be insurance, which reflects the cash value of my life and endowment policies. This portion grew 2%, and there's no portfolio action taken. Next, let us take a look at my liquid assets, one of which is my investment in funds. This portion grew almost 11% in value, mainly from organic growth. My investment in funds serve as diversification away from my active stock picking and also to track the fund's performance. Over time, I may want to move a greater portion of my assets to index funds and take a less active approach should I wish to. On portfolio actions, I switched an equity fund exposure into a distributing bond fund to get regular bond coupons to provide income. Next, we move on to the largest portion of my liquid assets, which are my stock investments. The overall value grew almost 32%, with time-weighted return of 19% year-to-date and more than 36% on a one-year basis. This is measured in Sing dollar terms, factoring in US dollar depreciation of 4% against the Sing dollar over the past 6 months. This compares with the year-to-date performance of the STI index of 13.6%, as well as the performance of SPY, which tracks the S&P 500 returns of 13.7%. This is just based on the changes in prices of the indices, excluding any dividends. In terms of portfolio actions, I trimmed some oversized stocks to reduce concentration risk, as well as increased my investments in dividend stocks and REITs in Singapore and in some growth stocks in the US. The stock portfolio is the growth engine powering the JP portfolio. Fun fact, the gains from my stock portfolio year-to-date already exceeded my annual salary last year. Lastly, we come to my cash bucket, the last component of my liquid assets. Usually, this moves in opposite direction with my stock portfolio, either increasing in size when I trim positions or become lower when I deploy my war chest into market opportunities. My cash position as at March 2025 included my severance package. And fun fact number 2, severance package benefits are not taxable as they are treated as capital gains. Over this period, my cash bucket decreased by almost 45%. Other than to fund my living expenses and FIRE lifestyle, I also deployed the cash into my stock portfolio, especially during April lows. Here's a closer look at my stock portfolio. As at September this year, I own 32 positions, with 70% exposure to US stocks and 30% exposure to Singapore stocks. The sector breakdown is as shown, with the largest exposure to the tech sector at 37%, followed by financials 80%, and so on. Putting it all together, I like to visualize the growth of the JP portfolio with a simple waterfall chart. Starting at 100% in March, minus 1.6% for expenses over the past 6 months, plus 13.6% returns of the overall JP portfolio, ending at 112% in September. This shows clearly that even in decumulation, the portfolio isn't shrinking, it's actually growing. Even after expenses, my net worth grew by 12%, ending September at 112% of my March 2025 baseline. So, what's my biggest takeaway? The first 6 months of FIRE indicated that my Chubby FIRE plan works in practice. Expenses are sustainable at 2.9% safe withdrawal rate. Growth tilt towards equity funds and growth stocks rewarded me with strong gains, while CPF and SRS accounts compounded quietly. Overall, JP portfolio grew 12% despite withdrawals. This is exactly why I built my cash bucket and war chest, to give peace of mind while letting my growth assets compound. Retirement isn't about stopping, it's about living with comfort, freedom, and sustainability. And to put this decumulation update in context, let me quickly recap my retirement pillars, the income streams that will carry me through the different stages of retirement. At 47 years old now, I'm funding my FIRE lifestyle from my liquid assets, made out of stocks, funds, and cash bucket, using a 3% safe withdrawal rate framework, and willing to manage my expenses flexibly. At age 50, my endowment payouts will begin, adding another source of cash flow. Then, at age 55, when I can access CPF assets withdrawal, that will add to my liquidity. At age 62, I will start drawing down from my SRS account, which provides another bridge. Finally, at age 65, CPF life payouts will begin, giving me a lifelong income floor. These pillars are carefully staged to ensure my lifestyle is sustainable without relying on active income. As I wrap up this update, I want to reiterate what this channel is really about. I'm sharing my journey from FIRE to Ikigai living, because financial independence is only the starting point. FIRE isn't just about money, it's about designing a life with purpose. My goal is to show how financial freedom creates the time and space to invest in your social, physical, mental, and lifestyle wealth as well. This decumulation update will be an ongoing series where I'll continue to track how I fund my Chubby FIRE lifestyle, so you can see how the plan works out in practice over time. If this video informed you or inspired you in any way, please give it a like. It not only helps more people discover my content, but also tells me that it's benefiting you. And if you'd like to follow along my journey from FIRE to purposeful living, hit subscribe so you won't miss the next update. Finally, I would love to hear from you. What's one area of your life beyond money that you will most want to invest in if you had financial freedom today? Drop it in the comments below. I'll be reading and replying. Till then, as usual, have a great Ikigai day.